with Bitcoin in particular, if you guys logged in to see the state of affairs today, yes, it's in the red. It's currently down alongside with the rest of the market. Of course, there's some stable coins, some projects, just a few that are in the green, but just this is what we pretty much expected at this point. So Bitcoin is down. Last time I checked, $3,760, down to $66 billion, and it's I think it's 2.5% down within the last 24 hours. The market itself is down back to $125 billion. I think overall we've seen $4 billion wiped off the market. So, we have been trying to say, wait for those key levels to get broken first before we can confirm if there's some sort of reversal, some sort of bullish sentiment, sustained with large volumes. And we needed to see that momentum continue. We needed to see those volumes continue to be sustained. And so it's really important that right now the bulls try and reclaim that support back at 3,800. It's almost there. But the number to watch is 4,200, like we said before, or specifically 4,180. If there's any, sign, any hope that there is enough pressure, enough bullish sentiment backed up by volume to be able to then start saying, okay, this is a sign of some momentum returning back to the market. This could be something new. And now it's just holding tight and hoping it'll hold on to that 3,700, 3,800 area. Because if it does fall back down to 3,600, there's trouble ahead, basically. So with the rest of the market, as I mentioned, it's mostly in the red, but the top 20 cryptos in particular, they're declined something between 2 to 5%. As I mentioned, the whole market is down by 4 billion, so 129 billion down to 125. And really, this has all been driven by sentiments and technical factors, really. It's still a bear market. I believe the bears still have this under control. Of course, the bulls are going to make some attempts to push and see if they can break some resistance levels. But we're just seeing there isn't enough momentum, enough volume, enough demand there. We have to expect that, investors are right now, they're exhausted and jaded with what's been going on. And it looks like we're going to have to wait for several major fundamental developments to happen before we see some level of interest, that will sustain volumes to come back into the market. So that range we've been talking about between 3,300 to 4,200, like we said before, that those are the areas to watch. And the higher it seems that the more it gets stuck in that range, the more likely that price may end up dropping, because we've seen that since the start of the bear market going back in January last year. We've noticed that Bitcoin has tended to have a large drop in value after it's had like a extended period of stability. This is something to watch out for, these patterns that keep happening with Bitcoin in particular. So yeah, 4,190, 4,200 is the level to be. It's the level to watch out to see if there's any changes going back to the bullish sentiment. So yeah, some people may think that this is the bottoming out of the market. Some people still believe it has a ways to go, that it will get worse before it gets better, and I'm of that that standing right now. That, well, I was stating this before as well, that we need to see more volumes, more interest coming back into the market, and I feel that the only way that may happen is if there's some major catalyst and some in respect to regulations, in respect to major backers and players being involved, looking to push adoption, something on a scale that that affects the industry and that encourages volumes to come back into the market. That's really what we're looking for to change the game up. And with some people may think that's to do with looking at what Fidelity will do, Nasdaq backed the ETF potential ETF approvals and so on. But something is going to happen in 2000 and in this year. Something is going to happen to, kick things off, and that's what the market's waiting for. But it won't be perfect. It won't be like a sudden move that just pops everything off. It will literally just be several things, like almost like a domino effect that happens. And really, we're going to know this with that. We have to watch out for the volumes. It has to be sustained. That's one of the key indicators that we have to look for. But yeah, it really is to do with the breaking that psychological resistant levels. And the one to watch is 5,000. If it does move past that 4,200, it then has to make that next move to 5,000. That's really where people will start taking interest. But as you can see, it's just been like, it's not how it hasn't really been doing. There hasn't been waves and waves of interest like backing up the volume. Of course, it lasted for a few days. That's great, but it's not enough. So until we see the default position being broken, we're still somewhat bearish right now. So I think if this situation continues, that we may see the price go down to 3,320, potentially 3,100. And from there, there's no telling where it may end up. 2,800, 2,500. But it's important to see how the next is super volatile the closer we get to the bottom. So wherever and whenever that bottom will play out. So the best thing to do is always make sure that whatever you decide to do, that you weighed up your risks. But certainly if you're dollar cost averaging, this will work out regardless for you if you look at that potential upside opportunities. And the vast amount of investment coming into the space, I do feel that Bitcoin and cryptos are, the industry as a whole is undervalued right now. So it's going to be interesting to see how this plays out once we know the status of backed, once we know the status of the ETF proposals, and so on. And what Fidelity will be doing as well, if they're able to push through with the institutional platform launch as well, and how these banks, financial institutions, will continue to position themselves, how they, where they put their money where the mouth is, and really going back to the volumes in the market. That's really what we're going to be focusing on, seeing if this isn't just a dead cat bounce. It's not just a temporary bullish run. We have to see it being sustained, and yeah, we'll see how the market responds. But yeah, so much continuing to develop in the space every single day, always moving forwards. Yeah, we saw what happened with Ethereum as well. That was down by 5%. Last time I checked, I think it was down to $126. You know, there was a lot of hype surrounding Ethereum. Hard forks, Constantinople and St. Petersburg hard forks. But you have to give it to Ethereum. It has been up, I think, by 15% over the past 30 days. So good for them, you know. I still think that Ethereum is undervalued, and it will continue to develop and scale up, and tackle some of its challenges. Now, Ripple. I wonder how many of you guys are Ripple fans. Ripple, as you may have heard, it has been approved by Coinbase Pro to be listed, and also on Coin to be integrated to Coinbase as well. Now, so much hype, so much expectation was around this coin. So much calls of, you know, whether, you know, debates, I guess, fierce debates, whether it's a scam, whether it's centralized or not, you know, whether it's a security, it's faced lawsuits and whatnot. But despite all of the regulatory uncertainty, Coinbase still decided to go ahead and list it. And you would think that, given that the market has been waiting and waiting and waiting for this forever, especially Ripple stands going crazy on every, you know, website trying to, you know, the shrill, you know, promote this nonstop. Their fans are absolutely incredible. Like they're super dedicated, right? But yeah, of course, on the day, it did increase something like 14% on the announcement, but it actually reversed the following day. It didn't sustain it. You would think that there'd be another wave of interest, and you know, the price would increase, even despite the bear market. It would buck the trend and still continue to hold that. But no, it has to fall back in line alongside with the industry, and there was a correction, as is to be expected, and it's almost reversed all of the increases it made. So yeah, the effect that Coinbase used to have, like upon the market, whenever Coinbase lists a particular coin, there's always some expectation of price increases, and that has happened with Ripple somewhat. But because it was so expected in a way, this has been talked about for quite some time. It didn't have that bigger impact that we thought it may have. And I think it's a, you know, several factors, and in this bear market, like I told you before, like we've been so battered and bruised, that any type of news that comes out these days, it doesn't have much of an impact on the you know, especially where coin listings are concerned. And they're short, even if it's just short-lived pump, basically, it's still, the status quo still remains with the industry. Yeah, Ripple fans also were upset that there was an article on Forbes asking, you know, pondering whether it was a scam. Because Jason Bloomberg, the president of IT research and analysis in Intellex, actually said this, that he thinks the Ripple business model is basically a pump and dump scheme, and that one of the clues that may have given Ripple that perception is how it treats, how it states its customers. Actually, if you look closely, some of the companies are actually partners and not customers. And that Ripple apparently pays these companies to become partners. And this arrangement is called Ripple Net Accelerator Program. And it actually started back in October 2017. So it gives these rewards to financial institutions that are first in their markets to process and promote commercial payments on RippleNet, and that they get rebates through that RippleNet Accelerator Program. So you had a lot of people coming out to attack that and calling it a FUD, and that Forbes was really just against Ripple and what it stands for and whatnot. Guys, I mean, you just have to look at the fact where we are in the market, regardless of whether we have listings, extra, more adoption in the space, or Ripple or another coin has now been, added to an exchange and whatnot. Or backed by influential people, or that it's got more partnerships and stuff. We just have to look at the bigger picture here and see where the industry is. Sure, over the long term, this will actually we will see this in the price appreciation, in my opinion. But I still think where we are, I think it'll get worse before it gets better. But having said that, still the developments that have been going on, the adoption that has been going on in the space, we keep talking about that I word, right? Infrastructure non-stop, is still like the industry is still like a construction site. So there's still the shell, the steel beams, the concrete supports, they're all going in already. They're all being is being expanded. Land, if you think of it as land acquisition, or if you think of the infrastructure that's been built across America, built across countries, especially during a recession, or even if it's in a particular economic cycle where we may be expecting a recession within the next few years, the infrastructure work is still being invested in, is still happening. It doesn't stop just because of where we are in the market cycle, in the bear market. So especially now, though, what we've seen is that companies, investors, traders, they are looking at using this point to really help the industry become more mature, more diversified. We've seen more niches crop up under bear market than the past 10 years. So a lot has been built behind closed doors and underground that we don't see yet. One of those adoption and one of those regulatory developments I wanted to mention is Wyoming. So we've now seen several states, American states, come out in some way, shape, or form to state that they are looking at ways they can take advantage of, to have that pilot program or that exploratory committee, or even to introduce debates on the House, on the floor of their state legislator, and have these discussions with their communities, with their voters and constituents, and see if this is something that if there's a demand for it, if this will help to save money for the taxpayer. Will this make people's life a lot more easier? Will it be more convenient? Does the fact that we have increased payment methods help? And we are seeing a big shift to people making sure that they are somewhat aware of some of the developments that are happening in the digital space, because a lot of not just businesses, but governments have been trying to find ways to streamline their processes, going through a process of digitalizing their operations. Not just blockchain, cryptos, put that aside. It's just even some processes are still archaic. They're still using pen and paper. They're still using methods that are, centuries old. That needs to be updated to be fit for purpose for the 21st century, right? Especially for 2019, with all the developments that have been happening, especially with artificial intelligence, machine learning, IoT, and so on. That now has been they're finding ways to integrate that and have a whole, all these different ecosystems working together to be able to allow all these processes to function as efficiently as possible, reducing costs, saving time, and creating value at every step of the stage for different stakeholders. And so with Wyoming, they've been looking at this and thinking, actually, we're going to take a lead. We may not be the biggest or the most important state, but we're going to redefine what it means to be a flag bearer or a pioneer in this space. And they've enacted 13 blockchain enabling laws. Okay, it's the only, from what we see, the only US state to provide a comprehensive, friendly legal framework for, blockchain technology to continue to thrive. And so this is really important because this does affect companies, individuals, different stakeholders. Like I said, it's so important to get the regulatory aspect right. If they're going to do it properly, if there's no way of avoiding regulations, they may as well do it that's friendly to the stakeholders, friendly to the founders of blockchain startups, friendly to the investors on the ground, your mom and pops, all the way to accredited investors, retail investors in particular is what the government, in terms of official lines, that's what they state. Investor protection is, super important to them, making sure they're not scammed or they're not, they're not hacked, and all sorts of measures that they want to put in place that they're not taken advantage of, because the backlash that will happen if those sets is really, I keep thinking it's more to do with protecting their own back rather than truly helping investors, and really acting like a nanny state in a way. I mean, we all have different opinions on that. It depends on what you feel what government's role is in your life, whether they should just stick to investment in major infrastructure projects and lowering taxes for everyone and whatnot, or you feel like they have a more important part to play to protect not just investors but different people for various things in different ways. It depends. It's all in some ways a political gambit. It's a discussion we can have for days, but the whole point with these laws anyway is to enable, this is so important, anytime where environment, there's a friendly environment that's fostered for innovation to grow, to occur, and that actually has a ripple effect with many of its constituents over the long term, and creativity, finding creative solutions to some long-standing problems in different industries. It really does speak for itself, the advantages of adopting this technology. And so the whole idea is to promote and foster the growth in this industry so it can bring jobs into that state. And most importantly for them, I think it's revenue. And if this is extra money for them in their budget, in their coffers, they're they're definitely going to put not only their ears to it, but they're certainly going to allow some what do you call it, on the ground, some pilots to happen to test it out, and if that's successful, it will be expanded across the state. So that's the typical move that we've been seeing from these states, and by accepting, placing themselves as a pioneer, or as a friendly home for these technology companies, not just in blockchain but other aspects, other sectors that are disrupting the way things are done. That is that's a great thing for Wyoming, great thing for its people, and I think it does set a path. It sets a road for other states to follow, for other people to see, okay, that's a state, a use case that actually is successful, and we're going to implement and adapt it to our own market, to our own constituents, and take it from there. So this is so important where Wyoming is concerned, and how America is perceived by global blockchain companies that rely on the new wave, and are looking to set up, their bases to be able to take advantage of the next wave that's going to happen in the industry. And so even, Wyoming's already considering itself as the Delaware of digital asset law. So basically Delaware has a lead in corporate law. So they want to be seen like that version, but for blockchain. So we're seeing more than 12, 13 already, of these American states. And Congress following Wyoming's lead by enacting bills, and specifically in how cryptos are defined, and to make sure that they're not that they are not seen as securities, that in terms of laws, and like the licenses to be able to trade as a money remittance service is quite expensive. So for to be exempt from that is super helpful. And seeing blockchain and cryptos as a different aspect of technology, a different asset class, and the fact that it needs to have a different legal treatment is fantastic for the industry, because it is unique. There's nothing like it, and that's the first step for it to be as closely aligned with the interests of the industry as possible. I mean, since we can't, completely stop regulatory frameworks from being installed, then we may as well have them as much on our on how we would like to see the space develop. I mean, I feel that because there's different niches, and this space is always, even within a bear market, it's not contracting, it's actually expanding. A lot of people don't see what's happening on the ground. They're only seeing price action, and that's a bit of an illusion. So all of the developments that we're seeing, and it's happening on different layers and different stages. Major parties, financial institutions, all the way to your average Joe, getting involved, all levels of competencies and knowledge, and expertise, or everyone seemingly from different backgrounds, different industries, are one way, shape, or form trying to find ways, carve out their own space in the industry, and how they can derive value from it and share that value with their stakeholders, with the community. And so this is really important, that establishing these regulations, if they can't be avoided, it's important to set a good precedence for the industry to thrive, for these a blockchain, these founders, these companies, to come out and make sure for them to be sustainable in the long run. They actually need an environment where it does foster its existence, it fosters its adoption, its use, so to speak. So yeah, in terms of capital, like if with Wyoming in particular, it's really not just about the people, but it's also about the money, and in terms of finding ways to not just foreign investment, but domestic investment, national investment. How do they attract that capital, that big capital that has been talked about for so long now, that it's expected to flow into the industry, and take it to, the market cap to be in the multi-trillions at some point. And so, it really is about having that legal framework for them that does respect direct ownership of those assets, the digital assets, whether it's by big investors, financial investors that are spending millions or even billions looking to go into the market, or whether it's just individuals, normal, retail investors, your average person off the street, every person that they cater to. They want to make sure that there's clarity in how it's treated, legally speaking. So more people are confident knowing, okay, I can use this. I know how it's treated and where I stand with this, and that there won't be any legal liabilities or backlash, or that it won't be criminalized. So it's really important that we see these things happen. The adoption to happen from state to state. And so with I do see it's not just Wyoming, but I do see that other states eventually they would hope that they have enough interest, and the infrastructure is placed, especially with custody. Imagine your 401k, your 401k plans and mutual funds, your investment, your portfolio. It's all seamless, and it's all you're able to do that in your state with no, potential, no gray areas, no potential to get in trouble for your investments and so on. So this is going to end up becoming normal over the next 5 to 10 years. It's going to be okay. I invested in this and this, and it's going to be normal. Like just when you're talking about stocks and shares and in bonds or whatever you decide to, real estate, however your portfolio looks like, it's just going to be normal because it'll be integrated. It will be regulated to some extent for those that want their private keys to be, placed somewhere else. So, another company to have custody of that. That's up to you. That defeats the whole point of the idea of financial sovereignty and independence from the banks, from the traditional systems. But some people will take that route, and that you're going to find that your own local bank, at some point, if they do adopt cryptos or come out with their own version, they will tap their base and make it a seamless process, make it easy for consumers, retail investors in particular, to onboard them and have everything in one area, in one spot. But actually that's the most dangerous thing you can do, relying with your bank for all your needs. The more diversified it is, if anything goes wrong, then you're protected with the fact that you're diversified elsewhere. The less correlated it is, your assets, that is, in the industries that you invest in, the less correlated it is, the better. Because if one industry is going through some bad time, but the others are not affected, then you'll be the potential depreciation that you face, it will be minimized, it will be lowered, and your risk will be mitigated somewhat. It will be, your exposure will be really reduced. So it's really, really important. We kept talking about asset allocation before, but anyway, with Wyoming, they set off another state, Utah. Their Senate is now considering blockchain, and their legislators are looking, okay, to see how can we now include this with us as well, in particular with a bill that'll be going before the state Senate today. Specifically looking at the definition of blockchain technology and cryptos and incentives and special treatment that will be done by Utah, and they're going to call it Blockchain Technology Act. This was actually the bill that was introduced was back in just a few weeks ago. I think it was February 25th, I think. So this is going to make business, a blockchain business, exempt from the money transmitter compliance rules. And so that, like I said before, in terms of development and adoption, that will definitely make it more friendly towards the blockchain businesses that are set up. So the whole idea of fostering that acceptance to make it seamless, to increase adoption and whatnot. And actually, in terms of blockchain as well, I think in terms of how the global retail is looking at this, the market for blockchain, it is expected to increase 29-fold over the next 5 years. And so these states are looking to get a slice of the pie. That that really is the core of it. They do not want to get left behind, and so they want to strike that perfect balance. As the regulation can be set, it's clear, it's easy to implement and follow by different stakeholders, and really, as I keep saying, at the heart of this is jobs, is revenue, is economic, for the economic factors. So that has political implications as well, as because if their constituents are doing well, if there's an increase with them getting jobs, in having efficiencies, then convenience, anything that helps to get them re-elected again is something that they also look at. The political impact of this is also good. As they say, the one of the election, well, I think the number one rule is the pocketbook, isn't it? The economy. It's the economy stupid, right? As they keep saying. So that is going to be that's going to be great for Utah if they implement that. If they go as far as implementing 13, like Wyoming, 13 blockchain-based rules, then that's great for them, and it will put Utah on the map as well. I think from my view, there's several things that it's known for, including Mormons, but being putting out the flag for welcoming people from the blockchain and from the crypto industry, I think that will definitely, and it's got stunning scenery as well. So, I'm sure they'll take that offer up if they have enough incentives, if it's economically viable. Because these days with a tech company, you can pretty much set up wherever you are, since you just need a connection online. But ultimately the environment, the atmosphere that's fostered for you to encourage your growth, for it to be like a, like a incubator for babies. That is really where the industry and its people is at. It's like one giant incubator, and you have all these people setting up their projects, and they're newborns basically, but they're still looking to have growth in a way that protects them, and fosters their acceptance worldwide. So yeah, that dedicated task force focused on exploring blockchain, and finding how, especially these pilot projects, that is the way to go about it. And they do consult with other states that have implemented and successfully. That is then also other countries worldwide, and they come out with a way that will be adapted to their own state, their own markets, and take it from there. And it's a learning process for them as well. So the whole point is to report their findings back to the state by the end of this year, by November the 30th, I believe. And so they're going about it differently. So with New York, you do, with their existing framework, their bit license program, it's been really controversial to say the least. But with what Wyoming is doing, 13 blockchain, blockchain friendly laws, it is trailblazing. And it is going to attract developers and companies in that space, in that state. And it is progressive in that respect. And so, on the regulatory side, definitely the politicians, the regulatory bodies are seeing the potential for this technology. And, before it was considered, okay, well, it's a technology that encourages criminals and whatnot. That narrative has not actually been, it's been blown out of proportion. I mean, if you look at the stats, only a small amount of the movement of funds in the space is actually attributed to criminality. Actually, a lot of the criminals still prefer US fiat, American dollars. So that is really important, that they don't miss out on this opportunity, on this innovation, because if they do, it will simply go to other countries, and the investment will be drained from the States. It will actually go elsewhere, will go abroad, and they will lose some of their best and brightest minds, and that revenue inflow that they could have had, it will be going to other governments, other other companies abroad. So we don't want that to happen, from what they're saying, from what they're with their actions. They're looking to take advantage and take a sensible approach to this and make it collaborative as well. So they're involving the people in the industry to find ways that they can come together, make common sense laws that will, be easy to follow. It'll be clear, and they'll be able to be successful in creating great use cases for their projects and whatnot, and bring value, bring money for the state over, bottom line. It's going to be about the revenue. Money talks, right? So I do see this being first healthcare clinic in Texas. Yeah, they're the first clinic in Texas to adopt Bitcoin as a form of payment option. So I think they have something like 6 clinics in the Greater Austin and San Antonio areas. I've actually been to Dallas. What was it? I went to Dallas and Dallas Fort Worth. I believe that was 2 different places. Like they get treated. So I was warned about making sure I identify like there's 2 types of Dallas, and what do you call it? Obviously I've been to Houston as well, been there twice, I think, or was it 3 times, and I've lost count. Yeah, I've been treated amazingly there. People are really humble, big-hearted, and yes, your food, oh my God, I had itis for days. But anyway, ProCare Medical Center, they will be accepting Bitcoin for their patients because they realize that their patients love digital digital payments, digital experiences that are seamless. So if they want to email, if they want to call, if they want to text, WhatsApp, or whatever it is, like having that seamless integrated ways to communicate with their patients is so important. Basically, it's really important to make their lives as easy as possible, and making sure that they extend their payment options to include cryptos, because they did find out that their patients are, open to that. They're happy with that, and they are looking to use it. So, they did their research, and they did find that there was demand for that, and they like to be they found out that their patients are techies, are early adopters to some respect. They have heard of Bitcoin. Some already use it, and so the fact that this is being done, and rolling that out to all of their other centers as well in Texas is so important, not only to those patients, but it does set a precedence for other healthcare providers to do the same. And this in particular, what was it? It's you could use Bitcoin to pay for deductibles, cash pay services, and whether they have annual physicals or chiropractic adjustments, treatments, X-rays, you name it. That is, you're able to use your Bitcoin to pay for that. And again, it's no surprise that they did a test pilot. They did make sure that this worked on a small scale before they rolled it out to the rest of their other branches. And that they recognize that the whole point of it's not just high standard of care, but it's actually having all these alternative methods that people will not only pay for it, but in terms of communication, in terms of operations, it just makes everyone's lives a lot easier. And that having that choice is so important for a lot of people. And so they're just getting ahead. They're just modernizing themselves and seeing where technology is at, and getting on board, which I commend them for. And right now, it's not a big percentage of payments. Obviously, this is just the beginning, but as we see more and more adoption happen, it's expected that will grow, and the numbers, they'll obviously see the feedback they get and respond accordingly. But yeah, this is a trend, guys, that we've been seeing over and over again. It's not going to be it's only getting better. It's not disappearing. It's not there's only, from what we can see, more and more providers of goods and services are accepting Bitcoin as a form of payment, despite the concerns about its volatility and whatnot. Third parties like BitPay are coming through to fill that gap and making sure that, you know, they can, like with Ohio's provider as well, in terms of paying for taxes, they're making sure that any swing, any volatility during that period of time where, you know, payments are exchanged, that they are the one to actually cushion, they're the one to absorb any changes. So that actually provides, you know, a lot of reassurance for all parties concerned. Yeah, I can only see this getting bigger, and going further. So right now, I mean, if you look at coinmap.org, there's just only a few medical practices and doctors around the world right now accepting Bitcoins, and ProCare Medical Center is only the only one in Texas, but I do expect that to continue to grow, and that list to get longer. And then on top of that, guys, very quickly, I don't know how many of you guys shop at Kroger's. That's Kroger's. Some of you may go to Trader Joe's or go to Costco or whatnot, but Kroger, massive, it's a retail giant, isn't it? It's incredible. And you know, it's more than 100 years old, isn't it? It's been going back since in late 1880s. So for years now, like, it has been accepting different methods, in particular with Visa card, credit cards, but recently it actually stopped. You know, it's basically is no longer going to accept Visa as a form of payment for the you know, for its Smith stores. It has a chain, which is, you guys may know, Smith's deal with food and drug, medicines, and drugs as in medicines, drug stores. And so what was crazy about this was that chains, what are they called, Smiths, Visa actually charges a higher amount, and we thought perhaps it's to do with the bankers, with other you know, price increases happening, but actually it was Visa that increased the price. And so, yeah, the fees, they complained that the fees was just, you know, too high, and that it has, it's been misusing, it's been actually violating its position, and charging retailers excessive fees for a very long time. So the CFO at Kroger, Mike Schlottman, he decided, okay, we're not going to continue with this. And so what happened when this news came out, you guys may know Pompliano. He's part of the Morgan Creek digital team. So he put on Twitter, you know, like an offer, basically, that he was, you know, they were willing to hook them up with, you know, Bitcoin Lightning Network, nationwide, throughout the stores. And, you know, one of the product managers actually responded, and he said, okay, you know, can we discuss this and see if this is possible? And then he replied back, yeah, let's do it. So the fact that Kroger, we don't know how high up this will go, whether they'll actually implement it, but the fact that, you know, that they've ditched a big brand payment processing name like Visa is kind of major, you know, and seeing whether other companies will also follow suit, that will be telling. But yeah, they've been, from what we see, they've been using their position to sort of bully and to put those fees for the bank processing card payments on behalf of merchants. And so this is there's alternatives out there is the point that Pompliano was saying. You don't have to stand for that. 10 years ago, this may not be a possibility, but this is a new day. So that was kind of I was smiling when I found out about that, because it will get to the point where you see retailers offering cryptos as a form of payment. I mean, we've seen it with some of the giants, with Carrefour in France, for example. We've seen it with some of the Brazilian one. And this is only going to increase the user, the adoption. The adoption will continue to go up on the ground. I definitely see it working for Bitcoin with other cryptos, right, like Ripple, Ethereum, even stable coins being introduced. That will take more time, but for now, because of that network effect, because of the brand name, because of its acceptance by some of the regulators like the SEC, like others that have mentioned that it's not considered a security, Bitcoin and Ethereum in particular will be at the forefront of this. But yeah, other stores are already accepting other we see this online and offline. Some of them accept Tron, some of them accept Dash, some of them accept Stellar. Like, it all just depends on the company, their industry, and what they look to get out of it. But certainly Bitcoin is leading the way with this in terms of adoption on the ground, and as a form of acceptance of as a payment method. And there was interest in something someone actually said: selling a Smith's gift card on Bitrefill would be a great way to make a zero effort stopgap solution there. But yeah, and that on top of that, you had development come out that the worldwide blockchain spending is forecasted to go up to $2.9 billion this year. So that's an increase of over 80%, guys. 80% from the 1.5 billion that was spent last year. 88% up for this year. It's expected to hit 2.9 billion. And this is coming from the worldwide semi-annual blockchain spending guide from the International Data Corporation. So, the fact that we're seeing blockchain continuing to be accepted and grow and mature, and we are at a crossroads right now. It's like, it's not just about talking about it or having policies on it. People, companies, organizations, individuals, they are piloting this, proof of concept, testing it out, and taking it to the next step. And so making sure, this is so important for companies, is that making sure that they invest in their money, seeing where this money is going. It gives them a good idea of where, how they're going to put out these products and services. How is it going to be adapted? Where is it going to be, best placed, best use of their resources, where they're going to put those investments in, and how that's going to pay off. And also to see where their competitors are heading with this. Where are they at with this? And what does that mean long term? What does that mean overall for their own industry, for their own, the niche that they work on? So, this is disrupting this technology, as we keep saying again and again. It's literally it's coming up. It actually created a brand new industry out of itself, and also all the auxiliary services that are around it, all the infrastructure that's around it, and how you have people, ideas, you have people, all sorts of types of bridges between the traditional world and this crypto, this blockchain world, where there's clear demand for people that are able to engage and communicate and get people to understand what this actually means, how this will benefit them, regardless of who you speak to. In some way, shape, or form, they do want to save money. They do want to save time. So, coming across new technologies is nothing new. We've been going through this, since the beginning of time, right? About how people adapt to it, it's becoming the norm now, with more and more processes and adoptions, with more what do you call it? Integration happening as well by different parties. It's becoming more accepted. It's becoming more normalized. That's the word I'm looking for. It's becoming the new normal. And so, because we're already so accustomed to new new versions coming out, like your smartphone being upgraded, your laptop, in terms of the processing power, it keeps the chip, it keeps doubling up all the time, and it's just like, where does it stop? It's just non-stop. It's relentless. And sometimes it can be too much information overload. It can be just too much to try and catch up with everything. But we are seeing more and more at a faster rate. People are adopting various types of technology, and actually this has become part of the culture. And the millennials in particular, they're helping to drive this much more faster than we realize. So it is the new norm. It is there's definitely a generational divide. I mean, you have the people in their 70s, 80s, and 90s that are struggling to catch up, and they're more prone to be a bit they're more intimidated, and this may be more foreign to them. But even with grandmas and grandpas out there, they're getting on board too. They're also seeing how easy it is to use, if they're taught how to use this to their advantage. And it's just making it more user friendly for it to help to increase adoption. That will be the key. And again, it depends on the target audience, and how you communicate with them, and what solutions you're bringing to their problems, their particular challenges that they face. If you're providing value, then it's a win-win. And so this is something we're going to continue to see. Blockchain spending will be continuing to rise, even during a bear market, as we keep saying, especially with the banking, with the investment services, insurance industries that will continue to invest in the billions, manufacturing industries, and especially with the supply chain management aspect of it, they're definitely going to invest more and adopt this technology. Retail services as well, retail industries selling products and services, they're definitely going to look to take advantage of this. And also on the financial aspect, the cross-border payments and settlements, that's definitely going to be the one to watch. We're seeing what happened with Ripple. We'll see what happened with JP Morgan coming out with their JPM coin, looking to target this area of the industry. And we're going to continue to see more adoption in this space, guys, from different players. And even with Venezuela, you guys may know some of the problems it's been having. The government actually launched a crypto remittance service as well. And this is, again, like in terms of adoption, we're going to continue to see countries, accept Bitcoin, Litecoin, Dash, Ethereum, to be able to, for different reasons, but they will continue to help to drive adoption of this, especially with countries with hyperinflation, like Venezuela, that is using this as well. Like, their political situation is still crazy right now. Maduro is still refusing to stand down and holding up the aid on the border, refusing to let that in, and it's all crazy out there. But they're still using Bitcoin. A percentage of their population is still using cryptos to be able to minimize the damages that the hyperinflation is happening on their savings, on their money, having protect that and minimize the exposure and the risks. And so, people are actually, seeing real life, that Bitcoin's helping them, cryptos are helping them survive. Things as basic as getting food is extremely difficult out there. And if cryptos can help do that, then of course we're going to see more adoption with that. And so, also we're seeing a report that crypto companies as well are facing trouble opening bank accounts. And I think a part of that definitely has to do with compliance and regulations. We're still yet to have that cleared out and written and passed and be put into law. But the fact that some banks are already denying them banking services is crazy. But let's be very clear with this. Banks were never interested in making the relationship between their customers fair and transparent. So this doesn't surprise me, because they do see this industry as a threat to them, and they're being in some ways forced to confront the fact that they're going to have to find ways to like that saying goes, if you can't beat them, you join them. So they're finding ways and setting policies as to how they can take advantage of this new technology, because they certainly can't shut it down. They can't, they can try and use their influence to help to move, whether affect the price or how they communicate it to their customers and whatnot, that put out negative narrative out there, some FUD that will scare some of their customers into staying with them, or many things. But the fact that then you have some denying banking facilities, it definitely shows that they feel threatened. But yeah, either way, guys, anyway, I need to leave now, but regardless of the news that you're hearing and the developments on the ground, and where the price is right now, you have to make sure that you're in a position where you've done your own due diligence and you're as informed as possible in different areas of the industry. And it's a messy process. There's no right or wrong answer. That's what I want you guys to be aware of, is that this space is continuously evolving, and regardless of the bad news that may come out, the FUD, all sorts of negative reactions that you may get, even with the positive aspect of it, we still need to have a cool, calm, clear approach and think long term of this space, because it's not Rome. I know this is such a cliche, but Rome wasn't built in a day, guys. So we all know that to some respect. So yeah, just continue to do what you do. Stay focused, stay informed, stay involved with the industry, and in some way, shape, or form, that will help to give you more confidence and give you more clarity, and help to be part of the basis, part of your decision making as to how you move forwards, and whatever direction you go in and whatever you decide to do. It's important to use all of this information, intelligence, data, opinions, observations and facts to be able to determine, okay, this is what I want to do, how I see myself gaining advantage in this space and deriving value from this, and make it work for me. So as long as you have that perspective, I don't see how you can go wrong, because you're with a community of global people that are involved in this industry and helping to increase its adoption, and its use cases is going up by the day, by the minute, by the hour, by the second, from top to bottom, left, right, in, out. So thank you so much, guys, for joining me, and hope you got value from today, and thank you very much. Have a great day, and enjoy the rest of the week, guys. Peace out, and let me see. Okay. Yeah, hopefully you'll be able to let me see. Okay. Yep, have a great week, guys. I'm just going to now stop this and see you on Friday. Thank you.